this webinar happens every Wednesday. Our goal of our webinar is a combination of education, networking, learning, open and honest discussions. So after we go through the main presentation, we'll have questions about the topic. And then we stay for our after hours party where you can ask us and talk about anything. Tonight, we're talking about being a savvy investor. One of the things I want to make sure that we're clear, we are not financial advisors. We are not your accountants. We are not your lawyers. We are here to provide education to the best that we know. Jasmine and Mike and myself are going to be talking. I think Shirar, where are you in the world?
I'm in Calgary right now, waiting to fly in about an hour from now. I'm just listening in.
And we have Sanjay back from, or he was in here. He maybe popped out again.
So you know Tracy Lynn that always joins us and asks questions at the happy hour. She's actually from Calgary. You guys could have joined the call together. Awesome. So I'm going to do quick, as I did the introduction here, we're going to split talking about this topic between Mike, Jasmine, and myself. And again, the idea of this is to give you what we think is the best information that we know based on our years of experience in it. So we're going to talk a little bit about how to become a passive investor. So if you want to go to the next slide, Jasmine. So we're going to do about 5 minutes, who is Massive Capital, and talk for about 25 minutes, share a little bit of our experiences, do Q&A, and then at the top of the hour, we always go to happy hour for those that want to stay around and continue to talk and network. If you do have any questions, you can put them in the chat, and sometimes we'll stop and answer if they're super pertinent. Other times we'll get to the end, but there will always be a time where you can unmute yourself and ask questions. So let's get on to the presentation.
Awesome. Let's roll.
So Mike, do you want to talk a little bit about the Massive team?
Oh, I'm sorry. I was letting you guys, I'm used to you running through things, but
I'm trying to share this limelight.
I appreciate Mike Bailey here. And actually, I'll let Sanjay share a little bit of himself in a minute. He's not been around for a while. He's been in the ocean on a ship somewhere. So I'm Mike Bailey, part of the Massive Capital Principals with Shirar Khan and Sanjay Agrawal. We came together a little over a year and a half ago now, and we'll see another slide later, a little bit about our process and our acquisitions. But the key is we come from corporate backing, we're full-time, and this is a business that we're in the building and continue to build. We have a team, which Trevor, most of y'all know already, and across the top, Jasmine, Maria, Candace, all part of our investor relations team. We have the acquisitions manager and acquisitions team, Brad and Ramiz, and our council back office stuff with Angela and Jonathan, so they're all part of making things happen and get things done. And then if you started looking into some of our education opportunities, Senate Eskridge may be the one you're talking to through that, and Senate's leading all of our education. We have a few other positions coming on, so more to come, building out the asset management team as well at this time. So thank you, Trevor. I'll let Sanjay, you want to jump in? You've coming off the boat back to the US. So.
Yeah, thanks, Mike. And you can see I'm the only one with a big smile on my face. No, I think great team and Massive here. As you see, Mike said, with some corporate background between the three of us, a lot of real estate experience, and of course the portfolio. And of course, we couldn't do any of it without the team that we have here with very varied experience, backgrounds. So, we love to partner, love to work with whoever is willing and has got the right intentions. So very open, transparent at Massive, and look forward to working with whoever. And, we're here to share our experience and journey and educate whoever we can.
So an interesting fact that I may have mentioned before, but I haven't mentioned in a while, my very first 2 passive investments 5 years ago were with Sanjay. So that's when we met, and then I met Mike about 3.5 years ago. And then, it's kind of funny how life goes full circle. And you establish a relationship with somebody. Real estate is a team sport, and super happy to end up where I am now. You want to tell a little bit about yourself, Jasmine?
Sure, thank you. So for me, I've been an entrepreneur all my life. I launched my first business when I was 15. So all my experiences working in different businesses, different industries. I've been in real estate for the last 4 years, doing mainly land. And last year I got a plug with Mike Valley and Massive Capital. So here I am 1 year later. So super excited to be here and being part of all the growth that we have had in Massive Capital. So excited for what's coming up.
Yeah, and then Maria and Jasmine and we work real close together, and we actually have a WhatsApp chat. It's called Trevor's Angels because they make me look good. Awesome. You want to go to the next slide?
Awesome. Sure. Oops, there you go.
So Mike, I'm going to let you do a really good job on this one here, if you don't mind.
Sure. So just the key here really is, Massive Capital is basically we're looking to create profit for us, build the business, and find opportunities of returns for investors across all phases of the real estate value chain. So a lot of you really can think, land or land flipping is like a beginning piece of that. And then you get the land and move into the land development, which is basically, bringing that into entitlement. The building development is going, up with the buildings in the process. So you break ground after you've got the land entitled and you do your construction. And then after you have the construction of that, you go into operations, right? And that's where we have been, mostly focused is the building operations and building renovation. So we buy properties, we've been buying properties which are then we renovate and then we operate. So we're really good in those last 2 pieces, not including the redevelopment necessarily, but those last 2. And then we go with partners when we want to do the land development and continue to build that capacity for us. So we have a couple properties where we've done that in. Georgetown is an example where we've brought in some partners. They're the developers with us, and Massive Capital is, partnering joint venture with them to do that part of the real estate chain. So the idea for us is to get throughout all pieces of the real estate chain. And then you think about there's multiple assets that you can fit into this chain as well. You could have retail, multifamily, across that whole line across the top, mixed use, offices, etc. So just as a basic idea of what is the real estate value areas, the chain of that, what can fit into that, and how do we fit, and how do we continue to grow in that area. Thank you, Trevor.
Awesome. Next slide, Jasmine. There we go. So this is a little bit of summary of Massive Capital. So last year, you can see down at the bottom, going from the bottom up, all of the acquisitions. They did 106 million last year. And then starting this year on the top, we've just closed on Amberwood, land development, as we mentioned earlier. We're working on the X Space. We'll just share a link a little bit later on about that. And then we're working on 2 506B deals. So we won't promote them here, but if you do have a relationship with someone in Massive Capital and you're interested, reach out to us. And all of these deals were either boots on the ground or we have partners that are boots on the ground. Oh, we didn't change that slide. All right. So this is our very fancy presentation because I say we have too many slides. So we're going to go through this pretty quick and then we're going to get out of slide world. So the most important thing for becoming a savvy passive investor is get educated. There are lots of places that you can go to get educated. Our goal with these Wednesday night webinars is that we offer education on various topics. There are lots of places where you can get education. So almost every night of every day, I probably, if I'm not on a Massive Capital webinar, I'm on somebody else's webinar learning. You can learn a ton doing that, especially now. You know, COVID gave us this unique opportunity to be able to get on Zoom calls and to do different things. Clearly with the power of internet and people's YouTube channels. So I tend to think, okay, I want to learn a little bit more about legal. So I'll spend some time in the morning going through some YouTubes and going through some channels. All of the other gurus or other people, they have different webinars. And, you know, for 99 bucks, you can join a weekend webinar. And yes, they are trying to get you to join their program. But at the end of the day, you get 100-fold of your $99 investment in education. And the most important thing that you need to learn about getting educated, no matter what we say or anyone else say, nobody has the one answer that fits all. Okay, there is no one answer that fits all. And one of the things I enjoy with Massive Capital and with some of our presentations we do, it's really interesting when two of the principals or myself or somebody will have a little different point of view, because a lot of real estate investing comes from where you're looking at the world. Where are you in the world? What do you need to get out of your real estate investment? So don't ever think, no matter who you're connected with, even ourselves, that one answer fits all. You want to make sure that you find out, and we'll talk a little bit about defining your investor goals, but it's super important. In-person meetups are a fabulous place, right? So I'm in the Austin area. We have a meetup. Massive is starting to do more meetups. There's plenty of meetups if you live in a major metropolitan area. And there's nothing more valuable than connecting with people, because again, real estate, as I mentioned earlier, it's a team sport. It's an industry that you need to know people. Okay, then the next one is to find a sponsor you know, like, and trust, right? So once you start to get educated and you have a little bit of idea of what you're looking for, you're going to want to find sponsor. For those that don't understand, sponsor are people that present opportunities, present deals, present things where you could make an investment with them. But it's super critical that you get to know them and you get to understand, because you want to make sure, first of all, that you know them. That's super important. So start getting some of your education from them, start attending some of their webinars, learning about it, asking questions, asking things. Could you send me some sample investor reports? Could you do different things? You want to like them. Who wants to do business with people they don't like? I don't. I don't think very many people do, right? So you want to make sure that their values are aligned, the things that they do align, the things that they share with you align with what you like, right? You're going to get into a relationship with an investor for 3 to 7 years with a sponsor. And then finally, trust, right? You want to make sure that you can trust them. And one of the big keys for finding trust is how quickly do you get your answers back from them? How responsive do you find them to be? Do you get the same answers? And it's a little bit different than to get educated, right? We may have different points of view, but different answers on things that are a matter of fact. All right. Then the next most important thing for you to do to become a savvy investor is to define what your investment goals are. Okay. Everybody has a different need. And I'm going to use this opportunity to make sure that I say this. I try to say this every week, every time I talk to people. First of all, don't wait to buy real estate and wait. But you need, so time is your friend on real estate, but you need to understand, what do you need? What is your level of risk? What types of things do you want to do? And we've done a few webinars about diversification. So how are you going to diversify? Where are you going to invest? All of the different things, but you need to know what you need. It is challenging right now, I'm not going to lie, to get a cash flowing deal that cash flows pretty well, just because the market is a little bit tighter. There still are deals that cash flow, but traditionally we find that a lot of our investments right now, you do make the majority of your money on exit. There are some deals still that cash flow, but you need to understand, what do you need? I also want to make sure that I talk a little bit about this when you're looking at what your investments are. Don't always chase the biggest offer, the biggest reward, because sometimes those rewards are put there like a very high unachievable pref payment or different things that happen. So you want to make sure that you balance out your investments so that you have some diversity and some safety. So a little bit of an idea is on this is, I always refer to it as you're at bat. And if you always try to go for a grand slam, the chances of something going wrong are a little greater, right? So don't be afraid to get a couple of singles in your portfolio, a couple of doubles, and then go for a couple of triples or home runs or even grand slams. And you don't always know what they are, but different investments carry different levels of risk. You know, so for example, one of the investments I'm in, it's an office facility. And it's what I refer to as, it's a triple net, double guaranteed lease. So for those of you that don't understand, as the owner of that facility, you're responsible for nothing. And the doctor personally guarantees the lease and his practice guarantees the lease. But it's not a great high return, but that's okay. That's my single. And then I go for the high value multifamily, deep value add. And then there's other deals like land development deals. And they all have different levels of risk and reward. And they also have timing issues, right? You don't want to put all of your money and have it locked up all of the time. You want to be able to have things that are coming due in 2, 3, 5, 7 years so that you have some diversification. But you need to know what your investment goals are. And within that sort of area, you need to understand the risk of each of those deals, right? Every deal has risk, no matter what anyone tells you. You are at risk as a passive investor. Your level of risk is only the amount you've invested. The sponsorship team takes all of the rest of the risk. But there is a risk that you may lose your money. And again, some of these high deep value add, there's a high risk and a high reward. There's a lot of reasons why different deals have different performance metrics, but you need to understand the risks. And there's lots of things that go into risk, right? Market trends, where are we in the cycle? Where are you investing? I'm terrified to invest in California. Sorry if anyone on this call is in California, but I'm scared of it, right? Now, I've got some good friends. They make lots of money in California. I'm super proud of them, right? They've got a little niche and they've done very well. But I don't like the risk of California. I don't like the risk of non-pro business, pro landlord states. I like high growth areas. A lot of people are leaving California. That's why I like Arizona, Texas, the Carolinas, Florida. You know, it comes up a lot where you just want. So again, that's all within your risk bucket. Now, the last one sounds super simple, right? Just get over the fear and do it. But at some point, you're never going to know it all. You're never going to know enough. You want to make sure that you've done your due diligence, you've done all of the things, but at the end of the day, you eventually just have to do it. And I want to make sure, you know, I talked about the don't wait to buy real estate, buy real estate and wait, right? Real estate is a game or an investment where time is your friend, right? Properties, everything appreciates over time. Certain deals have forced appreciation, which makes the value go up quicker. But again, real estate is your friend. And you got to understand, I want to talk a little bit. So I didn't start investing till I was 58. And I always tell this story. If I started when I was 28 and I put $100,000 in a deal, and on average, we look to double our money every 5 years, that 100 becomes 400, 200. I reinvest everything I earned along with it. And I'm making this simple, right? There's taxes and other things might be involved. And I take that 400 and I invest it for 5 years, it becomes 800. I invest it for 5 years, it becomes 800. I invest it for 5 years, it becomes $1.6 million. I invest it for 5 more years, it becomes $3.2 million. I want to make sure that you understand the power, right? As a 20-year-old man, if I had invested that money and let time compound my money, geared up with leverage and geared up with all the other things that real estate do, that particular investment could be worth as much as $3.2 million. That would have changed where I was. And that's only doing one, right? If we do multiples of it, and again, I want to know there's risk. I'm telling you the best kind of case scenario, but I want to make sure that you understand those things. And I know, again, I didn't want to go over them really in great detail. And if anybody has any questions, feel free to put them in the chat. Sanjay or Maria or Jasmine, sorry, anything I missed that you think? I mean, Sanjay was my first mentor, so you know, hopefully he did a good job educating me. If I got said something wrong, then it's his fault, I'm going to say. Anything, Sanjay? You're on mute if you're talking.
Yeah, no, that's very good, Trevor. No, everything so simple. And I listen to a lot of podcasts. So what Trevor said, get educated. Yeah, there are a lot of information available. A lot of it is free, a lot of paid. Take your pick, do something. And I'll share my experience. Started small back in 2014, and I was looking for a deal and I couldn't find anything. So I set a goal for myself back in 2014 while I was working full-time for Capital One, that I will go to 2 networking events in the evenings during the week and 1 in the evening on the weekends. So at least 3 a week. And that's what I did 2014 and 15, every week. Some of them repetition, some of them, new. I didn't care. That was my target, to just go to those events, network and learn. And from that, I grew, I learned. And believe it or not, I met somebody in 2014. They called me in 2017. And they are investing with me today, even with massive capital, even as I've gone from different deals. So these are a small world. Long-term relationships is the key. So like what Trevor was saying, getting over the fear and just doing it. He is doing it, But if you don't feel comfortable, don't do it. Take another year. Take another year. 1 year, 2 year in the big scheme of things is not a big deal. But get a way to get comfortable. Look at the numbers if you're a numbers guy. Look at the people. Look at the legal documents. Look at the performa. Show the share. Get feedback on the performa from other teams that you're networking with. So get comfortable with it. But if you're scared of doing it, just wait for another deal. Watch a deal roll out, and we share our deal performance as the deals roll out. Of course, that takes time, 1 year, 2 year, 3 year for deals to kind of roll out and show the performance. But look out for that. So, but yeah, very good, Trevor.
Yeah, and often too, a lot of people don't know this, and maybe sometimes the minimum is intimidating. Get to know your sponsor and ask them, hey, listen, I'm really intimidated. Is there a way for me to come in for less than the minimum? Again, you want to make sure the goal is to get started, right? And to start learning. And I didn't mention this earlier, but I've passively invested on 21 syndications. 7 of them have gone full cycle. And now I'm active on 7 deals. 5 of those came just by joining up with Massive. So thank you for that. But it's definitely, it's the first time I did it, I sent my money and I didn't sleep. And then the second time I sent my money, I slept, and then I had a deal that like literally did really, really well. I got paid back on that deal at 11 a.m. It hit my bank account at 1 p.m. I wired it out to the next deal with the same sponsor, because I've got that level of confidence and comfort, right? Man, I got no questions in the chat, so either I did this amazing job.
Trevor.
Yes, sir.
Hey, sorry, I'm at the airport. There could be some background noise. I was listening to the whole thing. Beautiful. Thank you. How should I say it? I tried to be a passive investor, but God has a way not to make me a passive. For whatever reason, I've always been an active investor. The only one passive I really pushed it hard, the deal didn't go through. So I got my money back. But so on that note, a couple of things, right? Is what's going to happen is getting over the fear. At some point, it's not going to happen all the time. Like, as long as you guys get close to it, then you can mitigate the rest of the fear of the people that you know, right? I always tell myself, Shariah, look, sometimes it's not how, it's who, right? It's like, I came from Shell, and at 40 out of 100,000 employees, only maybe 2,000 will be somewhere. Rest of them will be a mid-grade manager to below. And the folks who really grow up, they always had a sponsor, like somebody took them under the wing and shielded them and taught them all the business, right? And that's how I think about it most of our life, right? It's sometimes what it is, and also sometimes who, and it is the case. So hang out with the people that you tend to look at it. So going back to that second line, know, like, and trust, right? To us, one of the interesting facts about Massive team, 100% of the team, we have reverse recruited each other. And what we call it proudly, that skill first, relationship second. If you don't have the skill, how are you going to play the game? It may look like good fit for the game, but if you don't have the skill, how are you going to play it, right? And it shows up now more than before. So like trust is there, but with the trust, apply technical capabilities. They may not know what to do in real estate, but if they have gone through a down cycle somewhere else, if they have run a P&L somewhere else, that may make sense. That's all. Back to you.
Awesome. Thank you.
Hey,
Jasmine.
Yeah.
Oh, go ahead, Liz.
Yeah, I just wanted
Liz
to
is my new best friend, by the way, in case you guys
Hi,
don't know.
everybody.
We text all day long now.
That's right. I just wanted to add a little bit to this, that my experience is, you know, I've been in a lot of mentorships, and what I've learned from all of this is trusting the people that have already done it. And when I first started, I wanted to do it alone. I thought I could do it. But now looking back, if I would have just, followed the people that are already doing it, that I know, like, and trust, I would have moved along faster, and the fear would have subsided a lot quicker. So everything you're saying is in line with what I've done, and where I'm at with Massive now. So just wanted to add that little piece is, join. You don't have to do it all alone. You can join with people that are already doing it and doing it well. So thanks.
Awesome.
Yeah, just wanted to add, Trevor, at the beginning you say, like, get educated, go to all the webinars. There's so many resources out there. And I always tell people, at the beginning, you're gonna go and attend to every single webinar. You want to connect with all the syndicators. But once you find people who aligns with your values, with your goals, with everything, like, just stick it around. At the beginning, you're gonna go wider, and with time, once you find your tribe, like just go deeper, connect and build a relationship with them. So that's how I did it. And sounds like many of you, just listening. Sometimes we don't catch that, but that's how we do it. At the beginning, we are all over the place and eventually we just narrow down. So just wanted to add that part.
Yeah, and someone had asked about a meetup coming to Houston. I know we've had a couple. And in fact, it wasn't massive sponsored, but Mike and Shrar and them are there, was just last night. But you definitely want to get on our Facebook group page, and I'll put the chat in there. And we often do pop-up events. So for example, last Friday we did an event. I had to miss it, but it was Thursday night in Dallas. And then if you're in the Austin area, I do a meetup. Again, it's not part of Massive, but it's still a good meetup. In San Antonio, we have not gotten there yet, but there are meetups put on by other groups that are great meetups. So again, I'll put my contact info in the chat. This isn't all about leading you to us. It's leading you to get educated and get comfortable, right? And there are some good groups that put on really good events all the way across. So I'll put my contact in the chat again, and anybody can reach out to me. And I'm super socially active, and you can just reach out to me and say, I'm in this area. I know we did a couple of meetups in Atlanta, and we did one in Denver, and there'll definitely be more. And I know we have an event coming up in Houston at some point. I should know the date. And we have a virtual event coming up too that we'll share. But connect with us on the Facebook group. I'll put that link in here.
Trevor, don't we have one coming up in Austin as well? Or
we don't
the
have
space one you're talking about?
oh,
that one already happened. Yeah.
I think we had one last night, the main event, Multifamily Apartment Education Network or Investor Network. I think we are converting that into a massive event moving forward. So Mike knows he's cooking a whole bunch of stuff.
No, that's great. Sorry, I had a sneezing fit. Had to go offline a second. Yeah, no, we did. We had a great event last night at South. So that one's out in Katy, and it is somebody still consider that part of Houston, I think. So it's closer to Trevor almost than me sometimes.
Hey, they're looking down on Katy now.
No, I love Katy. I love it. No, but it's great because what I learned is a lot of people don't come to meetups, just because it's not, in a good area for them. So we're doing that one in Katy, and a lot of people I met last night come from that area. So it's a great opportunity, to get people in different regions of even a city, and Jasmine and I spent with the rest of the team, a lot of us in Dallas last week, talking about like location and meetups and things. And we drove to 4 properties and gave a tour of 4 properties that we have on Sunday. And that went from oldies Dallas, and then we went all the way over to the east side to Rockwall and Fate, where we have our property. Brought us back over to the center, almost north center, to McCallum, where we have, and then we went over to Fort Worth to wrap it up. And that lets you know, like, having some, meetups around different parts of Dallas, Fort Worth area, you could have, I think 100 in there and still not touching enough space. So that's why I think like having the one in Katy, and some people have it in Conroe or Woodlands, is a good thing. So
Anyone else have any other questions? Things you want to do? Yeah, old-fashioned shake your hand kind of person.
Yeah. So that's it. Keep connected. We'll be posting and more our events coming up. We plan to do some in the Galleria area as well. So
Mike wants Galleria. We already know. Mike, we
yeah,
like your spot. We'll knock out one in Galleria. That's fine.
I like Galleria. I like Katie.
And everyone here, we are pretty, so we talk a lot, we send emails a lot, so you'll know before we do anything. No worries. We got you covered.
And as Trevor said, I go to other people's meetups. I go to Disrupt Equity has some good meetups here in town.
Yeah. Apartment Educators has them, San Antonio, Houston, and Dallas.
Yeah. The Warriors group, which is with Rod Cliff, they do one. I've been helping them try to build one up. They do one here. Michael Lee has one up north.
They just suspended that.
Oh, did he? We just
Yeah.
talked about it like 2 weeks ago. He was moving forward with it.
Okay, I got an announcement they were suspended. Anyways, yeah. So,
okay.
But definitely, so certain things you look at, just go to meetup.com or Eventbrite and put in real estate meetups in your area. And we post our meetups on our Facebook group and on my, and again, on my contact link or there, I post so much stuff, I'll drive you crazy.
I think Trevor, we can let the cat out of the box a little bit. We have a website coming up. It's called Massive Multifamily.events. Whatever that we do, whatever that we go to, and wherever that we feel like it's a good meetup for everybody, we'll post it there. So give us about a week or 2 weeks or so. Information's coming on everybody's way about the platform where we're going to publish all the good ones that we attend or everyone should attend.
Yeah. That'll be, perfect. The Massive Multifamily Events. MME.
Yeah. And then we piggyback on other events like the one in Dallas. You guys were all at another event, but we had a massive event in the evening. And I think if I saw the pictures of it, it looked like it had a great turnout.
Yeah. About 50, 60 people.
Yeah.
It was good.
I felt bad for the restaurant manager though. We booked for 25 people. The restaurant could host maybe 70 people. We had 50 people show up. They have done a great job, but it was interesting how that played out. But thank everybody whoever came out.
Awesome. Well, let's go ahead and finish the presentation up, and then we'll go back to question and answer and chatting. And so we're 99% done. Top to the next slide, Jasmine. So we can't leave without doing a shameless plug. So we do have this great opportunity called X-Space. X-Space is being built in Houston. If you again reach out to anybody on the Massive Capital team, we can get you information. This is a very, very unique project. Our goal is not just necessarily to promote that tonight, but we wanted to make sure we mentioned it. And if I can get my calendar to move quick enough, we do have a webinar next Thursday. So if you're interested in learning more, and we also have previous webinars that we can send out. But this is a very, very unique opportunity. So you want to pop to the next slide, Jasmine, a little bit about what it's going to look like. And this is in Katy, so maybe we can have some meetups while it's being built in the area and look at people. But it's a very unique, eclectic condo. They're sold as condos for work, play, storage, all kinds of things, very much geared at car enthusiasts. So that's the end of our shameless plug. And next week.
Oh, go ahead. You're still on the shameless plug or no?
Well, I'm just going to talk about next week. We're going to talk about how to build your syndication team. And the joke before we let all you guys in, you just become friends with Mike. Because all of us became friends with Mike and we're all here. So we were just going to put a picture of Mike and his phone number up, but no, we're not kidding. But we're going to talk about, because real estate is a team sport. So how do you build your team? What do you need? What are the things that you need? And at any time, if there's a topic that you would think that you would like to hear about, feel free to share that with us. And again, you can reach out to anyone on the Massive Capital team. And right now we're just going to go. And if you have any questions or anything on this topic or any other topic, feel free to rate, just unmute yourself and talk. I think you can. If you can't, raise your hand. I think we can stop sharing so we can all see all the beautiful faces.
I was trying to figure out which one of those guys I was on there. I was the last one, I hope, the one with the
Yeah. I
tight
think-
around me. No. I don't know. And then I saw where the rest of the team is, so that was good. Thanks.
I'm the guy watching.
No, you're not. You're far from that.
So
I saw Liz had something in there, Trevor, for you to talk
Oh.
about.
what's that, Liz?
Yeah, Trevor, I was just gonna see if it's a good opportunity to speak to the education piece within Massive.
You want to talk about it? Go ahead.
No,
Come on.
would love to hear the official
I did
description.
put a link to it in the chat.
Okay.
Massive is starting an education program. We've got several different programs for it. Again, I don't like to use this too much to sell, but if you are looking to get educated, to get into being more active and understanding, definitely reach out to us. To be honest, how it was designed, a lot of us are members of other programs, and we said, what's missing? And let's figure out a way to provide what's missing. And put things together. So thank you for the link in the chat, but that was our goal, right? And again, selfishly too, it helps us build our army. People that are, if you want to get going, we need partners as well. And a lot of our deals are with partners that we've met through meetups and through other things. And many of our deals are done with partners. We do have it on the Massive website if you have a deal that you'd like to present for us to look at. So Gino, how can we help you, sir? I might have to unmute you.
All right, Ed, I got you. Are you there?
Yeah, I'm here.
All right, forgive me, and I guess I'll do you one better. You're going to get me in the very comfortable look. So I hope you enjoy what you see next.
Awesome.
All right, so I'm now following you on Facebook. I have tried to attend all your Zooms, but I'm the shake your hand, meet you in person kind of guy. Love your faces on Zoom, but I got to meet people. Otherwise, this is not going to work for me. So the fact you're coming to Katy, the fact you're doing Galleria works for me. I just need to know when and where, and I will be there. I saw the link to Massive Capital website portal. What does that do for me?
So that's if you want to see what offerings we have. So there's a Massive Capital portal, so it shows past deals and existing deals. Some of the deals you will only be able to see after you have a connection with someone, because those deals are 506B deals, so we can't publicly post them. So we need a relationship to be able to share them. So the portal gets you to where our investments are, and you can look at all our investments. You can fill out PPMs, and in theory, until you sign it and we sign it, you haven't invested yet. And it's everybody should read PPM at least twice, and I always like to do it on nights that I can't sleep, and always puts me to sleep.
Yeah, which is most nice for me. But that being said, that goes on to the next question I have, and you brought it up, this 506B, which is an obstacle for me at this point. Although I guess the other avenue, and I've approached this subject with you before previously, and that is becoming, forgive me the term, educated investor, sophisticated investor.
Sophisticated investor, correct.
So I believe that would be my route to gain entry into the wonderful pearly gates of let's make money together.
That's correct. Yeah. So it's a very interesting thing. So there's no black and white and clear rules. So to invest in a 506B deal, we have to have what's referred to as a substantive relationship. So that is, at least as few Zoom calls, and hopefully for you, meeting our team in person and getting to spend some time. we have to understand that you understand what you're doing and you've received some education and training. Okay, that's why you're called sophisticated. So
Right.
the concept of it is so that people don't call and steal grandma's money. And they're not their grandchild. Grandchildren can steal grandma's money because they know them, but I can't go steal grandma's money. I don't. So the whole concept of it is we have to have a relationship that's substantive. I know something about you. Other than you're good looking, now you turned your camera on. I need to understand what your investment needs are. And then we actually have like 2 different deals right now, and one might be a better fit for you than another. And so we can help guide you. That's part of the get to know, like, and trust. And then of
Right.
course the 506C, which is why we can talk about Xspace, that's only open to accredited, and you're allowed to solicit it. You're allowed to advertise it, talk about it in a public format.
Which is a real disappointment for me because that's the one that really caught my attention.
It
But
is
there's more to come. I know.
and you know, invest in a few deals with us that get you there quicker.
Well, and I got the feeling that was the route to which we will get through the pearly gates, and and the whole meeting face to face really is truly. I'll be transparent. It's my comfort level. You folks have impressed me beyond what you could even express, or rather beyond what I can express. You guys put a really tight package together. You present well. Tried to do my due diligence on your company, and I am duly impressed. So now I need to meet you. I need to meet you. So,
yeah, I'm gonna throw out a couple things. You're based in Houston then, Gio?
Yes, sir.
What part?
Houston. Galleria.
Galleria. Okay. All right. So
Yes.
I put a link in here. It's a WhatsApp chat. If you use WhatsApp,
Yes.
we have a chat group that we also connect with people, and we do, like Schreier mentioned earlier, we'll just either say, hey, let's go get coffee, or we'll even get a group of people and plan a coffee or a breakfast or something in an area.
That sounds great.
But if you guys want to join that WhatsApp group, it's there. The second item from the moved up a little bit. You can see there.
Chat.
So that's for everybody that wants to join it. It's for multifamily, massive multifamily Texas. What's up? And we talk about what's going on, and I'll have to approve it because we had some spammers, so we're trying to keep it clean in there.
All right,
make sure. Okay, so we'll get you into there, and that goes for anyone else. And that is one of the things we do try to get out, to meet people in person. That we're not really those, we do this Zoom about, the same reason as many others, and it's an opportunity, to connect to many, but we love to get out there. We love to shake hands and have coffee with people. So so we'll that's one other way to do that as well. So we'll find a way. We'll get together soon.
Excellent. Well,
make a plan.
So I definitely look forward to the face-to-face.
Yeah,
And
awesome.
I just sent you a private message. Text me, and maybe we can see each other for breakfast on Saturday morning, because I'll be in Houston.
Oh, well, then I will definitely make sure that I am available to meet you. I'm not sure if you remember me, but I'm not going to disclose why, but we'll take care of it on Saturday.
Hopefully it wasn't a dark night in New Orleans.
No, sir, but I came to you with a
All right, this is not the after hour yet, Trevor.
I'm liking Trevor's style already. This is good.
All
right. Thanks, gentlemen.
Yeah.
Any other questions out there? And I'll tell everyone, like, signing up for any of these, signing up in the portal, there's no cost to do that. It just gives you a chance to see the deals, see what we're doing. Signing up, if you're interested to hear about, like, the education package of coaching, mentoring options we have, there's no fee for that to tell us about what you're looking for and hear what we got, and so forth. So anybody else got any questions, and I have to continue, Trevor. Jasmine and Sanjay is going forward. I'm gonna be dropping off pretty close to 7.
That's, I know you've got, he thinks Grant Cardone's more important than I am.
No,
I'm
that's
only
not
teasing
true.
you. You paid a lot of money to get mentored by Grant Cardone, so I'm okay if you hang up with me. He's an all right guy.
Yeah, so I'll go see Grant for a while, and if I don't like it, I'll come back.
Awesome. So in theory, we've officially ended the even though we were pretty casual tonight. That's what happens when they let me be in charge. And so again, we're open to any questions. If people are going to say nice things like Gino, we'll even give you an extra minute to talk. It was nice. So I got your message. We'll connect. So
737.
thank you. Awesome. Anybody got anything else? Brenda looks like she wants to say something. She's like just sitting there saying, people don't talk. Eventually I call you out, right?
Yep, it's true.
It's just really good information that you're providing. It's just exciting because like I'm new to the industry, and it just hearing your experience motivates me. It's like, hey, if you continue to be connected with people like y'all, we'll eventually get there. And that's like gives me hope that, hey, it's possible for anybody that puts in the work.
It definitely is.
So that comment you made, Brenda, the one thing out of that is, and what I see happen over and over a lot is you do see people come and go, and it just comes into like the intention and wanting to want this and the perseverance and continuing to connect. And I'm not saying just here, but there's a lot of these different calls, and all those calls add value to you and the community, and the more you stay within those, the more that's going to happen, that whatever you're looking for. So
Where are you located, Brenda?
I'm in Austin, Texas.
Oh, awesome.
Texas.
She was at
I
X
know.
Space.
Came to the X Space, Trevor.
She was there.
I did meet you at X Space.
You done forgot me. Don't do me like that.
And I also wanted to shout out quick before I leave. I missed it earlier. I see a lot of new people in here, Masha and others that we met this past week. Great to see people joining us for the first time, and look forward to the future opportunities to connect and keep connected as well. I'll let you guys go ahead on your mishmash. Trevor dissing Brenda a bit.
It's okay.
sorry.
It's okay.
I'm so sorry. Now I know. And then we do have a meetup here in Austin. It was 2 nights ago, Monday night. First Monday next month, it's second Monday.
Next Monday.
Well,
now I know next Monday.
Yeah, and I did just in the message thing send you let's connect and talk. So what did you think of X Space? Since no one else has other questions, pretty interesting, isn't it?
Oh yeah, I loved it. I love the concept. At first I saw it and I was like, it just kind of looked like a commercial building, and I was like, that don't really interest me. But I went and I was like, there's a lot of potential. I mean, like they say, you can use it as storage or like business, like an office. And I was like, that's intriguing. Like that gave me a different perspective to tell like people to invest in it, because man, that's a really good deal to invest in if you have the money, for sure.
You're
I
funny.
absolutely loved it.
Awesome.
Awesome. Sorry I didn't recognize you.
It's okay. I understand.
Your hair was down.
Yeah, my hair was down.
Yeah, it looks totally different.
Oh, for sure.
My hair was down too.
Yeah, that's right.
The camera,
It's
it
so
just
funny.
How you doing, Johnny?
Doing good, Kate Trevor. Missed
Awesome.
you over the weekend. I
I
went
know,
to
I
the
wanted
first
to get
night
out
of
there.
the DML meetup. Didn't see you there.
Yeah. I had to do, well, I had to do, I was doing a presentation, so I couldn't do it.
Yeah, I wish I went to the DML, but instead I went to the Apex $1 million mastermind that weekend
Okay.
over in Frisco.
I think if you get friends with Johnny on Facebook, his kids cuteness overload videos.
Thank you, Trevor.
It's
Yeah,
just-
I do try to take him to some of the meetups around here in the Dallas-Fort Worth area. He's a handful. So if you see me with my baby boy, I'm probably most likely chasing him around the place.
yeah, a lot of energy.
Yes.
And then there was, I just saw her pop. Jennifer was also in San Antonio. Somebody was asking about San Antonio's. Jennifer, who's on this call, she's also San Antonio based. We always miss each other. I'm like, because I go to San Antonio every couple of weeks. I have a apartment property there, but and we've not connected in San Antonio yet.
I'll definitely be there next time you're down.
Awesome.
Yeah, it is thanks to Jennifer that I'm here. I mean, it's my first call
Okay.
with you guys. So I mean, I'm excited. First of all, I'm excited and thank you for everything. So it's thanks to Jennifer that I was able to join this team and I'm looking
Were
forward
you the
to
new guy in the WhatsApp chat from San Antonio?
yeah, it was me.
Okay, awesome.
Yeah.
I get so many WhatsApp groups now. All I do is go WhatsApp instead of WhatsApp all day long.
We say that Mike has he runs more WhatsApp groups than assets under management because
Yes.
he's the king of WhatsApp.
All right, anybody else got any questions, any comments? We can talk about anything but world peace, because I don't know how to get it. Tell us about your vacation, Sanjay, since nobody's got exciting questions.
Hey, yeah, before I tell this about vacation in a second, in Q&A, there was a question from Oliver. I'm
Oh.
not sure if Oliver's still here.
He's
Oh.
left. Oh, he's here, yeah.
He's here. How common is it for GPs, asset managers, to structure distributions to investors as return of capital? And then example, asking investors to provide an interest-free loan until the property sells, question mark. So, you know, as Trevor said originally, you know, no tax, legal, or financial advice here, but it's very common, almost 100% of the time, it is structured as return of capital until the capital is returned, and then it's a distribution, which is typically at the refi or exit. I don't understand the second part of the question, asking investors to provide an interest-free loan until the property sells. You know, this is a partnership. So, you know, you own a percentage in the LLC as an LP investor. So there is no lender-borrower relationship whatsoever. You're participating in the risk with the LLC. So, so anyway, so I don't understand that second part, but Oliver, if you have, yeah, go ahead.
Yeah, if you want, I can provide an overview of what I meant by the question. If distributions are structured as return of capital, what it basically means is, let's assume you invest $100,000 and you get a 10% return. After the first year, if you get paid $10,000, your capital base is reduced to 90,000, right? And then if you get another 10% return, your capital base is reduced to 81,000. So in this scenario, the investor basically just gets his money returned to him until he has all his money returned to him. And after that, if there's still some money left, then he would start generating a return. if distributions, and that is the equivalent of an interest-free loan effectively until he gets his money back. If distributions would be structured as return on capital, then you would get, to stay with this example, you would get 10% each year. And if you invested $100,000, then your capital base would stay at 100,000. You get a 10% next year, your capital base is still at 100,000. That's the key difference I was inquiring about.
Yeah, so the capital base for your cash flow perspective is irrelevant because your ownership percentage does not change whatsoever, right? Based on the original investment, there is a percentage ownership of the LLC that is there, that is set in the operating agreement, right? So that's not changing. So from a cash flow perspective, it's irrelevant how it's categorized, and again, no tax advice, but for most people, structuring it as a return of capital is more tax advantageous. And you can count that as return if you want or whatever. It's irrelevant because your percentage ownership is not changing. Does that make sense, Oliver?
Yeah, I think I understand what you're trying to say, but based on the number of deals I have been in deals that have been structured as return on capital and return off capital. I obviously have received K1s for both of these deals, so I understand exactly how the tax consequences work out. But I think for the investor, it's a lot more favorable if the distributions are structured as return on capital. And that's why I was inquiring.
So how is it favorable for investors as a return on capital instead of return off capital?
Yeah, if you can imagine, you have, so let's assume you have, just to pick a number, you have 4 million of equity in an investment. And if you pay investors 10% a year, and so let's just take some round numbers to make the discussion straightforward. If you would keep the property for 10 years, then after 10 years, you would have returned all the capital to the investors, right? So at that point, if you sell the property, the question is, so let's assume you sell the property and after all the fees have been taken care of, you have 4 million in assets that need to be distributed between GPs and LPs. If previous distributions would have been structured as return of capital, what you basically would say at this point when you sell the property is, well, I mean, the 4 million we had in equity, it was already returned to investors because over the last 10 years, distributions were structured as return of capital. So what we are doing now at this point is we take the 4 million that we have from the sales proceeds and we split the sales proceeds between GP and LPs based on the ratio that is specified in the PPM. Be that whatever it is, 70-30, 20-80, or whatever it is. If you would have structured the distributions to investors as return on capital, and you had initially 4 million of equity in the deal, and after 10 years, to stay with this example, you have 4 million of proceeds left that are to be distributed between GPs and LPs. If distributions were structured as return on capital, all the 4 million would have to be distributed to the LPs first. And so that's a huge difference for the overall returns for investors, for LPs in the deal. So it makes a massive difference. So if you change that scenario that I was just describing to say, okay, after the sale of the property, we have 8 million left to split between GPs and LPs, then in one case you would say, well, we distribute 4 million to the LPs, and now we have 4 million left to split between GP and LPs. But if you would say distributions are structured as return of capital, then after 10 years, you could say, well, we returned the capital to investors already. We apply the split of whatever it is, 70-30 to the 8 million. So it's a huge difference between overall return to investors.
I see. But in our deals, that's the reason there's a preferred return, where the LPs are paid that preferred return before any calculation for GP return is there, right? So irrespective of how the calculation is done, that's there. And if what you're saying, if the calculation is done earlier, it's a return on capital. So don't forget that return on capital without any preferred return up front, the 70-30 split will apply right from the beginning. Again, it would be dictated by the PPM, but then that 70-30 split is being applied all the way from the beginning, in which case the actual cash flow would be lower. And in an IRR calculation, the sooner you get your capital back, the better it is. And now your GPs are taking a return earlier as opposed to later when you exit and the preferred returns are met. So again, not doing the haven't done the calculation in Excel, I would think the return on capital would be unfavorable to the investors because of the delayed cash flow. And remember, IRR doesn't care it's return on or off capital. It depends on the actual cash flow. So if you got an Excel model or something you modeled out you want to share, I'd be happy to love to look at it and discuss more.
Yeah, okay, thank you.
Yeah, thank you. And Oliver, I forwarded your email to Sanjay. Oliver and I have been talking, and I posted a couple of questions in our WhatsApp chat. And, and also the question I asked on our call today that Mike was going to get the answer, is there a pref equity in front of the investors between capital stacks? So he's always got, one of my goals in life was to have a deal good enough that Oliver would invest in. So I told him that when I first, because he's always super analytical.
Hey, that's good question. Very good points there, and I love it. So, and I joined a little late that call, so that discussion was. So I get it. I'll look at the email and I'll reach out, Oliver.
Okay.
Thank you.
Thanks for showing up. By the way, it's nice to have you here.
Yeah, good question.
Awesome. Anybody else?
James, you must have questions. How are you, James? We thought of you last week while I was out and we needed a Chase bank account. Okay.
Might not be
Must
there.
have stepped away. That's okay. James is one of our investors on the deal. Had some good conversations.
Awesome.
Yeah. Terry, you have any questions?
She said she can't speak right now in the chat.
Okay. That's understandable. Good to be there. Good to hang out, listen to the good questions.
Awesome. Well, thanks everybody for joining us. As we mentioned, we do this every Wednesday night. Feel free to join us. Feel free to invite people to come. Feel free to bring your questions. Again, hard, easy questions. We like it. You know, the goal is that we go through this thing, right? We got to start with education and learning. And that this is where you learn, right? Being able to talk, ask questions, get people to answer, get follow up. That's how you learn, right? And get comfortable.
Trevor, I think Hecto had a question.
I think he was waving, but
was he
Hector, you
waving?
got a question, or were you just waving at us? Awesome. All right. Thanks, my co-host, Miss Jasmine. Maybe she's talking to Grant too. She's also in his mentorship program.
Probably.
Awesome. All right. Well, thanks everybody. You all have a good night. These are always uploaded to our YouTube channel too, if you want to rewatch them. And thank you so much. And I'm going to see you, Brenda, in Austin. I'm not going to forget.
Thank you, everybody. Good seeing everybody.
You now.
Thank you. Look forward to seeing you soon.
All right. Take care. Thank you.
Bye, y'all.
Have a good night.